Hi, all. This is Dr. J at 11, broadcasting live, streaming live from Long Island, New York, where it was sufficiently far enough away from Wall Street that I felt a little safe. Today was a disaster. Blood was on the streets. Why? I don't know. The interest rates went up. Trade wars. Um, the dollar. Tight money supply. All sounds good. People have to give a reason for why it is a sell-off. Even if that isn't apparent, it may or may not be related to any of the above. It may just be the normal course of a little profit taking, a little, um, a little natural 10% correction, and so on. We've had 10% corrections before, but 700 points on the Dow is a little bit hard to swallow. But you got to remember, it's not the same as 2007, when 700 points on the Dow was about 5.5% in one day. We were getting those routinely. That really made my head come off. 700 points today on the Dow is at what, 3%, something like that. So there's a big difference based on the price of the Dow. And also, this is just the first big sell-off day. We fortunately haven't had three in a row of these like we did in 2007. In 2007, the Dow would be up 400 points in 1 second and then down 700 the next second. We haven't had that kind of up and down movement either. So we're not 2007. I don't think it's time to panic. By the way, before we look at the charts of the Dow, the NASDAQ, the S&P, and Apple, I want to remind you that you should do your own due diligence, that my opinions are strictly my own and do not constitute investment advice. And occasionally I have good ideas. You can follow me, but at your own risk. Also, you like the video, you like my vlog, tell others about it, share the link, like us, write comments. Most important of all, please subscribe. Okay, this is Dr. J going to the charts so we can look very specifically at what the action was today. But before we do that, let me just talk a little bit more about 2007 versus now. In 2007, there was a bank called Lehman that collapsed. I haven't seen a bank called Goldman Sachs collapsing. I haven't seen a bank called JP Morgan collapsing. I haven't seen anything like a Lehman Brothers collapsing. So right away, there's no parallel. All right, let me go to the charts. In fact, I'm looking for a spot where I could say stocks are cheap, buy, without worrying too much about further downside. I don't think we're there just yet, but close. So let me show you where I think we're at, where I think where support is. And I do think we're near support on some of the major averages. So I'm going to share screen and share my charts with you. All right. All right, first let's start with the NASDAQ 100. That is by far the most interesting chart to analyze. It was the most untouchable index of them all. It was a Zoom channel. I call this channel a Zoom channel, the one that started right here about the end of March and ran right into the beginning of September. I call that a Zoom channel because it was just straight up for all those months, 6 months of straight up. I mean, it was really phenomenal move. So if we get a little pullback from the highs of 7,700 to where we are today at 7,044, that's not even 10%. So, I mean, come on, there's nothing to panic about. Just because we had for a 4.5% decline today, in one day is the scary part, I guess. But we're right at a key support level at 7,000. So between 7,000 and 720 is a key support level. And I think if that doesn't hold, we're right below that. Look for the 50% retrace at about 69.30, I think it is, this line. Yeah, 69.31. That would give you a retrace from the top here to the low on, where is that? Low on 2.9, which was 61.64. So 50% would give you, offer some support, Fib 50, right here. So you got one key level of support, which it's almost at, another key level just below that. If it does go below that, look out below. I don't see any real substantive support until about 6,300 and then about 6,150. So yes, it's fraught with danger. If for whatever reason, whatever brought it down this far continues, then we could see a major correction down into the low sixes. Let's say between 63 and 6150. That would be significant. That would be 1,600 points. That would be 20%. That would be bear market territory. So that would already get me upset. At this point, I'm just, an observer, not really that upset. Sure, I don't like my 401k to lose money. I don't like my quote unquote safe investments to lose money. But, on a daily basis, the stock market goes up, the stock market goes down, and you really can't lose sleep over it. If you're a nimble trader, you might want to trade some of these key support levels, but that's only for the nimble traders. Go in there and they trade the 2 times Qs and the 3 times Qs and the 2 times spiders and all of that. That's probably not for me, and it's probably not for you. Okay, so let's take a look at the S&P. And the S&P, which finally made a new all-time high at around 2930, something like that, has given back some, closing today at 2785. So it's off 3% today. It's again not down 10% from its all-time high. So it's just normal sell-off. It kind of blew up towards the close today. We imploded here. Not sure exactly why. I gave some possible reasons, but they're spurious. So there's no red herring. There's no Lehman Brothers collapse. I'm not taking it too seriously. We're right at the support line, the key support line that I drew here. If we go through that, there's trouble. It would probably take us to the 2690 level, which isn't that much trouble, but it's another 94 points down and another 3.25%. So we could have a repeat performance of today, tomorrow, and that would bring us down to that 2689 level of support. And that's, look, it's possible. But if you want to nibble a little at the open and nibble a little more if it goes down further, it's not a terrible strategy if you want to buy SPY. But then again, that would be more for a trade than for a long-term investment. All right, so the Dow is off, I think, the most of the indices. No, not the most. 3.15%, less than the NASDAQ. But 831 sounds pretty ominous. So 831 it is. And it's a big red candle that takes us below the long-term trend line, below 2 long-term trend lines. So it is a little scary here. The next support level is down here at 25,000. So it's possible we sell off another 600 points tomorrow. If that happens, I'd probably be a buyer of something, whether it's the index itself or quality component of the index that you've had your eye on. Maybe you want to buy Microsoft and you felt it was too high. Whatever that particular Dow 30 stock is, might be a good idea to think about nibbling if the Dow goes down to 25,000. Below that, we have very little support until probably, I don't know, probably this level here. Let me draw a horizontal line. I don't want to think that far down, but what the heck, might as well. Horizontal. Right around here, this low of the day was about 24,000, about 24,000. I got it too low. All right, move it up a little. All right, that looks about right. So we have two key support levels, 25,000 and 24,000 on the Dow. Just so happens that they're round numbers, so to speak, 25,000, 24,000. So we're talking in terms of thousands, which we don't like to talk in terms of. But the Dow is or was at 26,616. So we lost 8,000. If we lose 2 more thousand and it holds, that isn't the end of the world either. So the world is not collapsing. The stock market is not collapsing, at least not yet. So the key takeaway here is don't panic and wait for key levels of support before buying. Let's take one more view of Apple. Apple is one of those stocks people are waiting for an opportunity to buy. Well, maybe if it comes down here to the it's practically there, to the 216 level. That's where it is. Comes down a little bit lower to the 215 level. You might want to nibble. Or if you think the market is collapsing, you can wait for the next level of support right above here, maybe at this low. So at this low we have 197. So if you're looking for a very good entry point, 197, or maybe this high of 195. So 195, 197 looks like a really nice place to enter Apple if it gets there. So you got to keep in mind bargain hunting, like you do with Macy's. When clothing goes on sale, the women in particular seem to know how to grab it up. Well, in this case, the women and the men should be astute enough to grab up quality companies on sale. So wait for the big sale if you want, or nibble a little bit now, just in case we don't get the big sale. I mean, in the worst case, not the worst case, but other levels of support for Apple are the 180 level and the, see what this level is here, down here, 160 level. So 160, 180, 195. I doubt that it gets to 160. I would be shocked. It's possible it could get to 180. But more likely, the bargain will be at 195, 197. So I think I'm a buyer here at 195 to 197 if it gets there. So that's the story of the Dow. it looked a lot scarier than it is. My advice to you is don't lose any sleep over it, and don't look at your 401k when the stock market is going down every day. That's the worst thing you can do, looking at this 401k, because you can get upset, make a mistake, sell, and then cry when it goes back up. So you got to be very cautious what you do with your 401k. It's taken you a long time to build up that nest egg. You want to keep it growing. I know you want to keep it secure. So, again, you have to be a very nimble trader to sell mutual funds in your 401k and know when to go back in. So that's my warning for today is be very careful, in particular with your 401k, and leave the day trading to the day traders. Don't get involved with that stuff. You're going to lose your money as volatility increases. All right, so this has been Dr. J at 11, coming to you live from Long Island, New York, reminding you to please subscribe. It would make me very happy. And see you all tomorrow. Hasta luego. Ciao.